Hello everyone. I hope that everyone attended the exams very well. Will score grade O in the examination, all the subjects. And that is my prediction. Now today we'll discuss about the topic problems on capital gain. So just look at the Word document. The first question. Mr. Roshan purchased sculpture on 25th June 2000 for 3 lakhs and sold for 10 lakhs during the previous year. Selling expenses are 10,800. Calculate capital gain. Now, first situation is asking me, what is the capital gain if it is sold to Stalin? Stalin is a person, individual of Tamil Nadu state. Second situation, what is the capital gain if it is sold to JNTU, that is Jawaharlal Nehru Technological University, Delhi? Now, how to compute capital gain in case of situation 1? First, find out sculpture. Okay, is it a capital asset or not? Find out, does the sculpture is a capital asset or not? Yes, it is a capital asset. Okay, it is mentioned in the definition of capital gain. Okay, it includes jewelry, archaeological collections, sculpture, work of art, painting work, drawing work, ornaments made of precious stone or semi-precious stone, gold, silver, diamond, and platinum. Right. So it is a capital. Now see the duration, time duration. Now he purchased on 2000 and sold in previous year. It is more than 3 years. So see the duration. In general, if you hold the asset for more than 3 years, if you sell it, if you get a gain, that is called long-term capital asset in general. But there is some property where long term is called, if you hold more than 1 year, that is called the long term. What are those properties where you hold more than 1 year? Like equity share preference shares in a listed stock exchange, securities listed in a stock exchange, unit trust of India units, equity oriented mutual funds, zero coupon bonds. These are the assets where you hold more than 1 year. It's called long term. Less than 1 year is called the short term. Similarly, if you hold immobile property like land and building, more than 2 years, it is called long term. Less than 2 years is called the short term. Right. Now, and remember, please don't forget it. For depreciable assets, the period of holding is not considered. Okay, you cannot consider the period of holding if the assets are depreciable. So you have to treat, irrespective of period of holding, you have to treat as a short term only, because these assets are depreciable, like building, machinery, plant, furniture. These are depreciable assets, right? So sculpture is a capital asset, and it is a long time capital asset because more than 3 years, right? Now, what is the pro forma computation of income from capital gain for the assessment 21-20? Particulars, rupees column, the 2 rupees column, one for inner column, other for outer column. First, check the sale value. How much it is sold? That's called sale consideration. It is sold for 10 lakhs. And what is the expenses incurred in selling that sculpture? It is given in the problems as 10,800. Subtract from 10 lakhs, you will get 9 lakhs 89,200. That's called net sales consideration, right? And you have to calculate index cost of acquisition because it is long-term capital asset. You have to calculate index cost of acquisition. But for debentures and bonds, there is no need of calculating index cost of acquisition. For debentures and bonds, you cannot calculate index cost of acquisition. Whereas for sculpture, painting work, gold, silver, platinum, if it is a long-term capital asset, you have to calculate index cost of acquisition. What is the formula? Original cost of the asset into previous year index value by index of purchase year. Now, what is the original cost? How much it was purchased for 3 lakhs into what is the previous year index? There is a, you have to refer to cost inflation table index value. You have to remember the index value as 301. Always previous index will be 301 only. What is the index of purchase year? vehicles purchased in 2000. So any property purchased before 2001 or as on 2001, the value will be 100 only. So original cost into previous year index divided by index of purchase year, you'll get 9 lakhs 3,000, because we have to find out what is the actual value of that asset as on today. Right, it is 9 lakh 3,000. But what is the value of that asset as on the beginning? It is 3 lakhs. Okay, so to find the actual value of the asset as on today, you have to calculate index cost of acquisition. For long-term capital asset, you have to calculate index cost of acquisition. For short-term capital asset, we will not calculate index cost of acquisition. So we'll get income from long-term capital gain as 86,200. So from net sales consideration, you subtract index cost of acquisition, you will get income from long-term capital gain 86,200. So this is how to calculate, how to compute income from capital gain. The second question, if it is sold to JNTU University, suppose if you're selling these artwork or painting work or sculpture or archaeological collection, if you sell to any university or to the government or to any museum, it is not called capital asset. Remember, if it is not a capital asset, there is no question of computing income from capital gain. So the second one, we can say it is not a capital asset. Why? Because it is sold to university, not a capital asset. Not a capital asset. It's because it is sold to university. If you're selling to university or selling to government or selling to any museum, so not a capital asset. So it is not a capital asset. I'm not able to write on the screen because I'm using this mouse. Okay, this is not a capital asset, right? This is I'm not writing properly. Okay, the mouse is not good, so it's not a capital asset. So it is exempted. We can say if it's not a capital asset, there is no question of computing income from capital gain. Now we'll go for next problem. This is clear. Next problem. Now, Mr. Bruce Lee sold, right, his residential house for 26 lakhs 50,000 on 10th August 2020. This is the sale value, which he purchased on 5th November 1988 for 1,02,000. And please remind yourself, the property is purchased before 2001. So you have to consider the fair market value. Fair market value is given as 8 lakhs. Now, if selling expenses are 2%, compute income from capital gain. First, take the sale value. Sale value is given as 26 lakhs 50,000. Now, you have to subtract selling expenses. It's given percentage. You have to calculate 2% on sale value. The 2% on 26 lakhs 50,000, you will get, it comes to 5,300. Subtract from the 26,000, you will get net sales consideration 26 lakhs 44,700. Now, because it is a house is a property, right? House is a property, is a immobile property. Okay, it is a capital asset, and but the duration of buying and selling, it is more than 2 years. Remember, more than 2 years long term, less than 2 years short term. So we have to calculate indexed cost of acquisition because it is a long term capital asset. Okay, so what is the cost? Actual cost of the house 1,02,000. But you have to compare it with fair market value, FMV. It is given in the problem. Whichever is higher, that is called the original cost of the property, 8 lakhs. 8 lakhs into, you have to take the value of previous year index value 301 divided by 100. 100 is the index value of 2001. Because if property is purchased before 2001, the index value will be 100 only. Okay, let you remember it. What is the last year, the previous year index value 301? What is the 2001 index value? 100 only by default. So you will get 24 lakhs 8,000. You subtract from 26 lakhs 44,700. You will get income from long-term capital gain 2 lakh 36,700. This is the way how to compute in case of immobile property. Remember, if you hold the property for more than 2 years, if you sell it, that's called long-term capital asset. And before 2 years, if you sell the property, it's called short-term capital asset. For short-term capital asset, we will not calculate indexed cost of acquisition. So please remember this point in your mind so that you can do very well in the examination. You can do correct in the examination. Now let us go to the next third problem. Third, during the previous year relevant to the current assessment year, the previous year is 2021, current assessment 21-22. Mr. Binny purchased the house for 4.2 lakhs and after 12 months he sold for 4,80,000. Now brokerage paid to purchase the house is 10,000 and to sell is 18,000. Calculate capital gain. Yes, find out is a capital asset or not. Yes, it is a capital asset, but it's a long term or short term. Remember, he purchased for 4.2 lakhs and after 12 months, after 1 year, he sold it. And remember what I told you, for immobile property, if you hold the asset for more than 2 years is a long term, less than 2 years is short term. But he is selling after 1 year, that is called short term. But here consider that he is paying the brokerage to buy the house. Okay. So that brokerage amount should be added to the cost of purchase. Okay. And he's paying brokerage to sell the house also. That comes under the selling expenses. You can say selling expenses or brokerage expenses. Okay. So, or transfer expenses, you can say. So take the sales value. Sales value is 4,80,000. Now, a sales value is 4,80,000, right? This is 4,80,000. What is selling expenses, brokerage expenses, what is transfer expenses? Take 18,000 because selling expenses 18,000. Don't take this 10,000. Don't add these two because this 10,000 is a capitalization expenses. Capitalized expenses, this should be added to the cost of purchase, cost of acquisition, right? Now 18,000 you had subtracted. Net sales value is 4,62,000. Then what else? So can you calculate index cost? No, because it's a short-term capital asset. We cannot calculate index cost of acquisition. Less cost of acquisition. What is the actual cost? 4,20,000. Add 20,000 brokerage to buy the house. Actual cost will be 4,10,000. You will get income from short-term capital gain as 32,000. This is how to compute income from short-term capital gain. We will not calculate index cost of acquisition or index cost of improvement. Okay, got it. So please keep in mind the brokerage paid or selling brokerage paid to buy the house is a capitalized expenditure that should be added to the cost of the asset, cost of the property. Okay, so we go for the next one. Fifth problem, which I posted in the WhatsApp group. The fifth problem is post WhatsApp group. I'll read the problem for your information. I'll read the problem for your information. So I'll read it once again. It is posted in the group. Please refer that problem. Mr. Ashavardhan is owning a house and used for residential purpose, right? He's using for self-occupied purpose. The house which was constructed for 1.8 lakhs 40 years ago on 11 July 1995. Okay, he constructed 40 years ago. Okay, on 11 July 1995, he entered in an agreement to sell the house to Mr. Abraham for 8 lakhs. Right. Sorry, there's a technical problem. Yeah. Now, Mr. Abraham, he received advance from Mr. Brown. And what happened? Mr. Abraham failed to pay the amount, and the advance amount is forfeited. And this is the amount is forfeited on 11th July 1995. So therefore, the amount is forfeited before 1/4/2014. And the house is sold for the previous year 82,25,000, and selling expenses were 1%. They're given the fair market value as 14 lakhs. During the previous year, 2002-3, one more floor is added to the building at a cost of ₹6 lakhs. They're given the cost inflation index value 105. And during 2008-9, 3 lakhs is spent for renovation and painting. Calculate income from capital gain and tax liability. So we'll calculate income from capital gain. Now take the sale value. Sale value is 82 lakhs 25,000, right? From that, you have to calculate selling expenses is given as 1% on 82 lakhs 25,000. That's 82,250. Then you will get net sales value as 81 lakhs 42,750. Now here, what happened is the advance amount is forfeited, returned back. Can say it is forfeited before 1/4/2014. Therefore, you have to subtract from the cost of acquisition. Right. So he has given the, because the house is purchased before 2000, but to compare with the fair market value, cost of house is 1.8 lakhs, fair market value is 14 lakhs, higher is 14 lakhs minus 80,000, because 80,000 is the advance forfeited. That is before 1/4/2014. So the actual cost is 13 lakhs 20,000. So you have to calculate index cost of acquisition. You will get 39 lakhs 73,200. Suppose if the advance amount is forfeited after 1/4/2014, ignore it. You have to treat as income from other sources. Or in other words, you have to ignore if the advance amount is forfeited after 1/4/2014. But here it was forfeited before 1/4/2014. Therefore, we are reducing from the actual cost of the asset. So you will get 39 lakhs under 2000. Now you have to calculate index cost of improvement here. So I had to add here index cost of improvement. Not just cost of improvement, index cost of improvement. Now what happened is that here constructed one additional floor that is called the cost of improvement. But as per the add, whenever you are making some improvement, that should be in the form of construction only. That, in other words, regular and routine expenses, you should ignore it. That is not taken as cost of improvement. Regular and routine expenses should not taken as the cost of improvement. What is the cost of improvement? Should construct additional room or additional floor, right? And if the cost of improvement incurred after 1/4/2001 has to be considered. If it is incurred before 1/4/2001 has to be ignored. But in this problem, it is incurred in which year? 2008, 2002 and 3. Okay, so we are not taking the 3 lakhs because it is spent for renovation and painting. That is not called cost of improvement. That's not called cost of improvement. Means you have to construct new room or to construct additional floor. So we're taking only the 6 lakhs, which is cost of improvement made in 2002 and 3, because one floor is added, constructed. So 6 lakhs, you have to consider 6 lakhs the cost of improvement into index of previous year 301 divided 105. What is the 105? The cost of improvement has taken place in the year 2002 and 3. The index value is 105. So you will get 17 lakhs 20,000, and from 81 lakhs 40,750, you have to subtract 56 lakhs 90,200. You will get income from long-term capital gain. That is 24 lakhs 49,550. So this is how to conclude. If advance amount is given and if it's forfeited, right? And remember, the cost of improvement incurred before 2001 has to be ignored. After 2001 has to be taken into account. It is the same formula. Okay, original, that is meant cost of improvement into last year index value divided by index value of improvement year. In which year you have made some improvement, you have to get that index value. Okay, you will get 17 lakhs 20,000. So total net value will be income from long-term capital gain, that is 24 lakhs 49,550. So remember, the cost of improvement should be in the form of constructing additional room or constructing additional floor, not renovation or painting. This is not called cost of improvement according to Act, that is capital gain. It is mentioned in the Act. So it is not called the cost of improvement. Section 45 to 55A in that Act, it is stated that cost of improvement has to be in the form of constructing additional room or additional floor. So how these type of problems will come in examination, please refer the video. And I wanted to know from your feedback, whether it is a positive or negative, because I need to improve myself. So please have a nice day. Thank you.